I usually get a lot of inquiries related to commercial motor insurance. So in this video, I'm going to provide a quick guide on the workings around commercial motor insurance and the different types of covers which are available within the Kenyan market. So first of all, the definition of a commercial vehicle: this is a vehicle mainly used for an income generating activity, or rather commercial activities within the Kenyan market or also outside the Kenyan borders. So when it comes to commercial vehicles, they're mainly categorized into three main parts. So first, you have the PSV, which are commercial vehicles used to ferry passengers, fare paying passengers. So you find nowadays in most insurance companies, when you're going especially to buy insurance for your taxi, which can be the chauffeur driven taxis, which include the vehicles which have, or rather which work with the online apps where clients can be able to book for trips and pay you based on the usage of your vehicle. So the individual, or rather you as a business, can be able to purchase the PSV, motor insurance, under a commercial cover from different service providers within the Kenyan market. Next, we have own goods. So for own goods, this is whereby you're taking insurance for your commercial vehicle, which is purely used for transportation of your own goods, rather goods which you actually own. They can be goods which you're going to sell, or goods which you're ferrying either from one point to another, but you are the owner of these goods. And then finally, you have general cartage. So for general cartage, this entails carriage of goods, either for hire or your own use, or rather own goods. Now, these different covers vary in terms of benefits. So when you purchase the first cover, which is the PSV cover, this cover entails an additional insurance for your passengers. However, for the commercial own goods and general cartage, here you don't have any coverage of your passengers. It's also good to note, in all these covers, the driver is also not covered. So in the event that you want to cover your driver, you buy an additional type of cover, which can be the Workman Injury Benefit Act insurance, or you buy for your driver a personal accident cover. Now, when you have a clear understanding of this, now you need to understand the different types of insurance. So first, you can either buy a third-party only insurance cover. In this case, you are insuring against payment or other liabilities which arise when your vehicle causes losses to other people's lives or property. So in the event your vehicle is to blame for an accident, the third-party cover insures you against payment of these particular liabilities. So in most cases, once this occurs, you report to insurance company, where your insurance company in most cases will ask you then to pay an additional amount, which is called an excess. So after you pay the excess cover, rather the excess amount, the insurance company appoints a lawyer on your behalf to represent you in court. In the event there's amount which is supposed to be paid, the insurance company is able to bear this cost for you. Next, you can either purchase a comprehensive motor insurance cover. So for the comprehensive, here you insure against losses related to the third-party liabilities and also losses related to fire, theft, and accidents. So in this case, you find that in the event that you incur these particular losses, you're insured up to the limit of the value of a particular vehicle. And it's also good for you to understand the additional clauses involved in these types of covers. So one of the main clauses is in the theft clause. So you'll find that in most insurance companies, in the event that you haven't taken any additional measures to reduce theft probability, such as investing in a vehicle tracking system or an alarm system, you find that the insurance company will penalize you in the event of theft. So the excess, you might pay close to 20%, which is an amount deducted on the value of your car, which you're supposed to be compensated. But in the event you invested in additional security products, you find that your excess is significantly lower, unlike the person who hadn't invested in this particular anti-theft security measure. So here at Online Advisors Insurance Agency, we provide access to different motor, or rather commercial motor insurance covers from different service providers within the market, where we cater for both the budget and the value in terms of efficiency in payment of claims and adequate support for the clients and the general service providers within the particular ecosystem. So to learn more, or rather to purchase your motor commercial insurance, you can simply visit our website, which is www.onshore.co.ke, or call us through 0723 645 810. Thank you.